Hi everyone, my name's Bernard Doyle, JBWere's New Zealand Investment Strategist. Another week, another election, not a good one for the Tories. Second really misjudgment of their voters in a year, and leaves that country in an interesting position with respect to who's running it, how long will they be running it for, and what does it mean for Brexit. From our perspective, it obviously doesn't make the UK more interesting as an investment destination for long-term investors. Really because we don't know the answer to any of those questions. It seems unlikely that Theresa May will be Prime Minister for a long time, but we don't know that. It seems likely that the pound may come under more pressure, but again, if this result with the hung Parliament and what that might mean for how long the Tories remain in control means that the Brexit negotiations edge towards a softer outcome, that could be positive for the pound. So really it's wait and see for the UK, but as I say, for us, it doesn't make a more interesting investment backdrop. And then the contrast is over the Channel in France, where politically things have cleared up in a way that no one really anticipated 2 or 3 years ago, and possibly leaves France on the cusp of meaningful reform. And we say possibly because we've been there before, but really with Emmanuel Macron's win, and again a very strong showing in the first round of the parliamentary elections, he has positioned his centre party march on to have a majority in Parliament and really have a mandate to change things in France. And so from an investor perspective, France is actually looking really interesting, and for us, Europe continues to look a place where there are still opportunities for good returns if they get things right. And obviously we've mentioned before, Italy hangs out there as a risk, but if you put France in better shape than it is now, that's a big step forward for Europe. So politics, as it has for the last couple of years, remains very important, and we can continue to watch the evolution there for how it changes our investment opportunities. This week we'll be back in focus on central banks. We have the Fed will make a decision on Thursday around interest rates, widely expected to raise their rates again by investors. So as always, the language that Janet Yellen uses will be important as much as what they do with rates. So we again expect the rates to rise, but how they talk about the rate rise will be just as important. After this round, we expect maybe one more rate hike later this year, and really the disagreement between us and some of our research providers and market pricing is not so much around this year, but 2018 and 2019. We think when we look at particularly the strength of the US labour market and the unemployment rate, which is now down to 4.3%, the Fed will be comfortable continuing to edge those rates higher even in a low inflation environment, whereas other investors are saying, after this hike and maybe one more, they'll proceed very, very slowly. And then finally on Thursday as well to New Zealand, we'll have a GDP number. We think it'll show around 2.5% to 3% growth here, and that's a good number. But our ongoing bugbear with New Zealand growth is it's very population driven. You take out the population growth and our GDP per person is growing at a much slower rate of around 0.8, 0.9%. And really I think coming into an election here, the focus will be on that improving the quality of growth and being less reliant on population for the headline GDP numbers as we go into the next 5 years of where our economy is heading to. Well, that's a quick update from us. As always, please give your advisor a call if you want any more detail on any of those issues we've raised, and we'll be back soon with another update. Thank you.